Hey guys and girls, hope everyone's doing well. So this video here is just an example of everything that we have spoke about into TTF 2.0. And the reason for doing it is I just want to show you a live trade. So this was a trade from yesterday, EURUSD longs. Now, as you can see, actually that trade could have gone for a hell of a lot more. Our target was actually 1.1191. Okay, and the reason for that target, okay, first of all, the reason for that target is just because of this level right here, which is obviously, as you can see, a point of interest on the hourly time frame. Okay, so that was the reason why I was happy to take profits around the bottom of this region. Okay, now obviously, little did we know the DXY wanted to keep dropping, and actually would have provided a lot more in terms of risk reward. So why did I place this position? Okay, why did I place this position? Now you can see my point of interest here, okay, and you can see that this is also potentially refined on the 10-minute time frame. So first of all, why was I looking for this? Okay, why was I looking for this? Okay, and it's quite simple when you have a look back. And the first thing is the break of structure. Okay, so at the end of last week, we had momentum. Okay, with this hourly candle, we had the break of structure. And then what happened is we then pulled back into this order block right here. Okay, so this is our first demonstration of bullish order flow. Okay, our first demonstration of bullish order flow. We've pulled back into the order block that was created around this level here. Okay, and if we wanted to, we could use the lowest point, but it's completely up to you. But anyway, as you can see, the market has bounced off of that once we opened on early hours of Sunday night. Sorry, early hours of Sunday morning for me. Sorry, Monday morning for me. And then throughout the day yesterday, we pushed up, okay? And again, let's have a look at other concepts that we discussed. We pushed up and we found and met the liquidity, okay? Which is around this level here. Now, again, I always use the bodies normally. When I'm personally trading, I will use the bodies to associate with break of structures. But as we can see, the market then pulled up to this level, and then classic, what happens? The market grabs the liquidity from these highs and gives us an opportunity to potentially enter this market for a long position. Okay, so we've got break of structure number one, okay, here, and then we've got break of structure number two here. Okay, and this is just on the hourly time frame. Then what we've also got here is we've got the order block that was respected. Okay, and that order block being respected means that we have potentially bullish order flow. Okay, so bullish order flow potentially kicked in here, made a new high, which is exactly what we want to see when we're looking for our positions. Now, when we look at the point of interest, okay, on the hourly time frame, the point of interest on the hourly time frame is this one here, right? This is the area that becomes interesting, where we could come back into to grab that liquidity and grab those orders to actually take that market and fuel that next move in this market. Okay, so that's all I would have done on the hourly time frame. Okay, so I've marked out my target here, which is where I was happy to take profits. Okay, and I've also marked out my point of interest, and then it's a case of being patient. Now, what else can we see here that is also in alignment? Okay, the moving average. Okay, the moving average. And this is what I mentioned to you. Once you know the flow and the direction of the market, when we come back to that moving average, it's almost like the premium versus discount aspect. So once we pull back into that moving average, most likely, if we've had a move in the direction that we thought we were going to have, then most likely we have pulled back into an area of discount. Okay, so this is our leg, this is the top, and this level here, 1.1160, is where that discount begins. Okay, so this is where the reason I talk about premium versus discount as well is not only so that we can personally get value when we're buying or value when we're selling, but also because institutions and banks and the larger players in this market, they're not going to be buying at premium. They're not going to be buying expensive prices. Okay, if they need to buy their dollars or euros, whatever it might be, or sell their dollars or euros, whatever it might be, they're going to also be looking for prices that are discounted. Okay, so we've got that discounted price, which is there, anything below 1.1160, which is where I began looking at it. And obviously then we have, in conjunction with that, we have the synchronization and confluence of this moving average now as well. Okay, so multiple different reasons why we were happy to enter that market. Okay, so then what I did was I jumped into the 10-minute time frame. Okay, And on the 10-minute time frame, what I actually did was refine the order block to this level here. Okay, so I refined the order block to this level here. Now we could also have included this one, which is the previous break of structure on the 10-minute time frame, which then is potentially going to be what was previous supply broken, and therefore potentially going to be creating a demand, okay, which is exactly what happened. So once we've pulled back into these levels here, what we're then looking for is our opportunity for entry within this market, okay? So we're looking for that opportunity within the entry for this market, okay? Now, the first break of structure was very minimal, okay, very minimal for me. But because the overall hourly bias, the overall bias of DXY, which I'll go on to speak about in a minute, was in my favor, I was more than happy to look for entries. So the reason why I entered where I entered, not only because of these hourly ones and then refined to the 10 minutes, is then once we pushed away from that level that I believe we were going to push away from, okay, we then have our 10-minute order block. Okay, we can start it there, we can start it there, it's completely up to you. But we have our 10-minute order block where the market has come back into it, and then we've looked at bouncing back out. So this is where my entry actually was, okay, right around this 10-minute order block. As soon as we came into there, I had quite I had some confidence that the market would be rejecting this level, okay. If we go down to the 1 minute, okay. So if we go down to the 1 minute, okay, this is how we can get even tighter stop losses, okay? As you guys know, when I do the signals, I don't do really tight stop losses, okay? Simply because people that are just following signals and not actually learning do not want to see lots of stop losses hit, okay? Whereas me personally, if I hit a stop loss, it's fine. I'm not bothered. It's just a small percentage of my account. And therefore, if I want to do a 4-pip risk, 5-pip risk, I'm happy to do so because I might miss one opportunity and get a loss, but actually the next one might come through. So with regards to what's happened here on the 1 hour time frame, again, this is the area we slotted into that was important to us, okay? And we then had break of structure, number 1, okay? Break of structure right here. So I'll just delete this one now. You know where that 10-minute box is, okay? That 10-minute box is roughly around this kind of level here. So anywhere here was where I was interested in getting into the market, okay? So we had that break of structure number 1. And we had also a break of structure number 2. Now, when I'm looking at this break of structure number 2, what I'm also looking is the order flow. So we've got the 1 minute order block there. We've come back, we've tested it, and we've bounced back up, and we've created a new high. Perfect. So next one, we've got bullish order flow, example number 2. Okay, so 2 points right there where the market has actually broken out, okay, made a new high, and actually come back and demonstrated that potentially what we're having here is bullish order flow, okay? So ideal entry on a 1 minute would have been if we had come back into this level, which we didn't end up doing, but that's why we use the multiple time frames. You use a 10-minute as well. And once we had then kind of pushed out of this region, we can start seeing momentum. Look at the momentum within these candles begins to be strong, okay? And once we then got that pullback into that 10-minute time frame, that was when I was happy to enter this market, okay? That was when I was happy to enter this market. And what I did actually was just wait for, sorry, just find out where we are. Here. So what I did was, this line that I've got right here, okay, this line that I've got right here, what I did is I waited for the market to just kind of breach that on the lower time frames, which is the top of that order block, to show that we'd gone into it and what we had done after that is rejected it, okay? That's what I was kind of waiting for. And if I scroll back and show you that. Okay, once we had come into this and then we bounced out of it again with a bit of force, okay, that's where I was like, do you know what? I like this. Now I'm going to look at trying to get that entry out that order block, okay, which was roughly around this region. So we went into about 2 or 3 pips of drawdown, nothing substantial. Obviously, the stop loss was just below here, and I think that was sensible enough. Okay, what we could have done, we could have done the stop loss about 2 or 3 pips less, okay, which would have given a much better risk reward, but still, perfect entry. And then what we had is we had the market excel from that region, okay? So that was the exact reasoning for that trade, okay? Now, again, it's just simply scrolling down those time frames and looking at everything that I've spoke about in TTF 2.0. Okay, that's all I've done here. Now, the other question that was asked was regarding DXY. So obviously my anticipation for DXY was, as you guys already know, my anticipation for DXY this week was overall bullish, okay, overall bullish, but I'm expecting that pullback, okay, especially after such a big week last week. I am expecting a pullback. And as you can see, I'm expecting a pullback to around these regions that we are now. Now, does that mean I just buy that now? No, it doesn't, because order flow is still bearish, momentum is bearish, so we need to wait. We need to be patient and wait for exactly the same thing on the DXY that we want to find anywhere else. But what I did find, okay, what I did find on here was that we had broken this structure. We had come back up here, didn't quite touch that structure, but again, we'd broken structure again. So once we broke that structure again, what I did was actually just highlight the start of that move that broke the structure, which was here, POI for short USD, okay? And as the market came back into this region, what do we have again in alignment? We have not only the POI on the hourly time frame, but we also have that pullback to discount if it's a short position, okay? And therefore, we have the we can also see the moving average as well, okay? So once the market pulled back into this level, we had a relatively good chance that this market was actually going to drop and begin to take lows exactly as I expected it to do this week. So that was the reason why on DXY as well. Again, I don't go into like 1 minute timeframes and stuff on DXY. There's not really any need to do that because we're not looking at entering that market. We're just analyzing it and watching what it does. And by doing that on DXY on the hourly time frame, then there's a lot less confusion. You just watch the market, the flow of the market. You just watch what it's doing, and then you go from there. So at right around that point, about 4 o'clock, that's where we began to reject this level. And if we go on to Euro USD, right around the point of about 4 o'clock, as you can see, we rejected this level. Okay, so multiple things in alignment for the reason for the reasons why for that trade, and as you can see, we actually took out. Okay, we actually took out that level of supply. Okay, absolutely took out that level of supply. I took profits just shy of it because Mondays are a funny day for me. Sometimes we actually end up getting trades being like 3 or 4 pips away from target, and it just decides to reverse. Okay, but hopefully that explains exactly why. Again, very, very basic, just looking at those breakup structures, looking for the pullbacks, looking to see the order flow is bullish, okay? And if it is, then we just find that perfect entry. And that perfect entry was this kind of level here, which is where the orders came in to make that next high. So we just wait for that, be patient, okay? And execute the position at the right point with the stop loss in the right point, okay? So I hope that helps. I'm gonna obviously add these videos in so that you guys can just kind of see things in real time. And I'm not only just going to add winners in as well. I will add losing trades because losing trades are part of the game. We might miss things and get stopped out, and I'll kind of explain the reasons why we might have been stopped out as well, just so I can help you and you can continue to learn not only just from great winning trades but also from the losers as well. So any questions, guys, let me know. Hopefully that explains everything as to why I took that. But again, just remember everything that I spoke about in TTF 2.0 was in alignment here. Okay, that's exactly what you guys need to be looking at. Always using DXY as well. Always using DXY. Okay, even if you did go down into the 10-minute time frame or even the 1 minute time frame, what you would have seen here is you would have seen that kind of little break of structure here, and then especially the break of structure here. And again, like I said, with DXY, it's not necessarily going to come back up and test everything perfectly. It doesn't work like that with DXY. But on the other markets, you should be able to find the great opportunities like this, okay? So would have been an absolute great trade if we continue to hold it as well, potentially 6-7 risk reward, and that was with a 13 pip stop loss, okay? 13 pip stop loss is quite big, okay? Quite big for the style of trading that I kind of want you guys to do. But at first, I think it's very important that this is what you do when you are actually trading the market like that. So alternatively, it could have been a 9 pip stop, okay, and just put it below this level, which we know is going to potentially act as demand, okay. That should be enough to clear out, okay. So I hope you find that useful, guys. Let me know if you've got any questions, and let's have another great day.